So this has been my analysis of the financial sector, 3 times bull shares, FAS. Let's move on to XBI. XBI, I've got a lot of divergences going on here towards what I believe to be the top of a rising wedge. Let's get into the shorter time frames. I do a more detailed analysis here on yesterday's video, but I see 2 ascending wedges here in this pattern on this long wave up. This is our uptrend channel, so the overall price movement is bullish. But right here, we come into the channel, we set our A, B, C, D, E. Like I said in the financial stocks analysis, we should touch our apex even though we break down. This is actually a good sign right here, and we do break down. And we come into what I believe to be another ascending wedge pattern right here. Let's go ahead and just bring this down slightly. So we come in, we set our A, B, C, D, and I'm expecting us to run up to E, where the apex lies, and then fall way back down. As far as a divergence goes, we have one here on the 2-hour chart from this high to this higher high, and right here price is flat for the 1 hour. So moving into the shorter time frame, we're here in the 15-minute chart. I can see right away that we might not make it all the way up to our apex point here in the ascending triangle. And the reason for this is fairly simple. One interesting thing is I saw a diamond bottom down here, which is fairly rare. When you do see them, I just want to point them out. It's marked by a high point in a bottom, followed by a low point, as well as numerous touches in the price action from side to side, filling in the white space. In the 15-minute here, we have a divergence. We have a low and then a lower low, as price makes a low and a higher low. This cannot happen. We see that we have a wedge that formed right here, and price just gets squeezed here in this tight little area, and then it finally makes its last breath of air and goes lower, gets too tight for it in there, and we drop down to this support line right here, and we try to run back up, and we hit a double top right here and get slapped back down. This would make sense that we run up here, because if we go along with what the overall price move right here, what we expect it to do, which is to move up to the apex point, we see this exact same thing in another ascending wedge occur. We have price break down out of the ascending wedge and then try to move back up towards the apex point, and we notice that the high point is where the apex of the ascending triangle actually lies, which is interesting. I find it interesting always when theory actually is true, and you see that on your charting. And we break down lower. So I marked this in red right here as a double top area with this bolded line. It looks like we completed this impulse wave up. I bought some LABU, which is the bearish Biotech ETF, 3 times leveraged fund, and we'll see how that plays out in the remaining days. Let's go on to the 5-minute. And lastly, we can see an interesting divergence that would have tipped us off to a potential corrective move downwards here, and that is that our stochastic makes its high point right here and continuously moves lower all the way into our trend as price moves higher. The stochastic doesn't significantly have to move lower or precisely, just like a general outline. And you can see here that this is relatively flat, but the move is, ultimately downwards. But the comparative move in price is significantly higher, and that would tip us off that even though this is, a weak downward move, price should not be moving this high, this fast. And so, and the psychology behind that is that if this is our high point, our price is right here at, say, like 70, 75, and if our stochastic, which is a measure of trend, sets its high point down here at a lower point than it did when price was at 70, 75, and price is now at 71.50, this is, something isn't registering correctly here, something's a little bit off, and we see that take place fairly immediately after this divergence comes in. And again, divergences aren't a predictor of a price move, they're just used as a supporting bias towards your overall pattern, and in this case, my overall pattern was this ascending wedge that was playing out right here. And so once you have a pattern, you want to start looking for divergences, Fibonacci levels, resistance and support levels, and just the price action itself. And once we broke down to this point right here, I was a little bit wary because we broke below this support line, and then we come up, we make a lower high, which is a second indication. I'd look at the divergences, I'd see there is one, and then I see that we break below this a second time, and we try and we touch this support line, and we get rejected, and we waterfall all the way down. And that's just the psychology of how I would view this price action today. So I'm bearish biotech for the short-term future. Potential support levels in the near term are, it looks like the 78.6. We already fell through that, so I'm not going to give that too much hope right here. However, we do have the support line, this lower support line right here, and it might bounce off this price here at 70.40. Or what I believe might be a more likely scenario is that we fall down at least to the 61.8 level, which is our previous, consolidation zone, if you want to even call it that. Price moved sideways for about 5 minutes. I believe that we might fall more realistically down to this 38.2 level, which I've marked in green as a potential decent entry point. This is at 68.6, and another good entry point would be here at the 23.6 level. All right, so that's my analysis on XBI. Let's move on to volatility.